investor. We're talking real money.
Interesting thing about investors, most of them discover at some point that they need help managing their money, because at some point it gets really complicated and or we do dumb things. So we go try to find someone to help us manage our money. And, well, what should you expect from the people who manage money? What you get is often different than what you should expect. I'm Don. That's Tom talking real money. Tom, what should you expect?
Well, I mean, this comes up a lot. And it's still a very small number of people that use an advisor. I forget. I think it's like 10% or something. It's small. And if you're a do-it-yourselfer, you know what you're doing. That's great. I mean, there's two parts, by the way, of help, as Don pointed out. One is building a plan, creating a portfolio, rebalancing, doing all those things. The other is the
Did
emotional.
I say those things? I don't think I said those.
You kind of said those in fewer words. But then the other part is the emotional, because we're emotional beings and we have a tendency to make bad decisions at the wrong times. But this comes from a Wall Street Journal article that says how to tell if your financial advisor is doing a good job. And the first one,
I'd love to know what they think.
Well, the first one is, how do the fees stack up against industry averages?
That's a good start.
Well, it's a good start, but I will almost guarantee you that 90% of people that use an advisor don't know what they're paying.
90?
That's probably that
being
much.
generous. No.
Okay, maybe more. Yeah,
I bet 95 really don't know the full extent of what they're paying.
Nope, because they think, I pay him 1% a year. Yeah, what about the investments? Well, I don't pay anything for that.
Yeah, you do.
Right, you do. You do. So, I mean, and they say investors who pay fees on assets under management might expect to pay 0.59% to 1.18% a year. Now, that's baloney, because we see people still charging 2% or more for asset management.
The reason they say that, Tom, is because many of their advertisers are the people charging the 2%.
There you go. There's my heedless contrarian coming back in 2023. So that's one. Then the next one is, how does my investment performance stack up? And this is again, so we talked about this on a recent podcast. If you hired the guy that put more than half of your money in one stock and they're up 32%, you're thinking you're a genius.
No, you're thinking they're a genius.
Yeah. Okay. Pardon me. Well, for hiring him, you're a genius.
Oh yeah. Okay.
But I think this is worth noting. If the portfolio performance is drastically different than a series of benchmarks, and I know these aren't the S&P 500, global portfolio, those kind of things. If you compare it to that, and it's like, wait, I lost like 30%. Why did I lose so much? That's worth considering.
Or wait, turn that 180 degrees. If the performance is far better in a given year than the indexes, than the overall average of the market, then they're doing something that is probably incredibly dangerous.
And we know from recent television show, if they're making money basically every month, nobody can make money.
It's a Ponzi scheme.
You can't make money every period. Let's put it that way. Number 3, does my advisor communicate to my liking? We know survey after survey shows most people get fired because they don't hear from their advisor. It's not about the fees. It's generally not about the performance. It's because they don't hear from their advisor.
Well, okay, this one though, it has a lot to do with the loose usage of the word advisor.
That's true.
You expect an advisor to, at least the investment advisory business, to be an ongoing source of guidance. But the vast majority of the people who use the term financial advisor are people who sell product, and the only call to them that is worth making is the call that results in a sale. If there is no potential for a sale, they'd rather be calling somebody else because you are not worth their time. That is the truth. That is the truth.
And here they say 42% of advisors said they connect with clients quarterly. We connect with our clients at least quarterly, and I think you should. I think your advisor should reach out to you. Life changes, things come up, and oftentimes,
now bear in mind that's self-reported.
That's a good point. Yeah, thank you. No, it comes from Smart Asset. You trust them.
But the 42% of advisors say they contact.
No, that's a survey by Smart Asset, and I know how much you trust
advisors.
them. So yeah, right, yeah. Exactly. So number 4, does my advisor keep up to date on industry trends? like the new things like Bitcoin, cryptocurrency,
Okay.
SPACs.
Yeah, exactly. I was sitting here
that
going,
kind of
wait a minute.
thing,
What would be the proper answer to that? The answer would be no. My
No,
advisor
exactly.
does not keep up with industry trends. That's why I should hire them.
And you want them, but they should be aware of what's going on, right?
Right, but they better not be acting on
exactly. And
trends.
the people that did, especially the last 5 years, my goodness, if they jumped into technology or they jumped into SPACs or they jumped into cryptocurrency, wow. I mean, that would have been bad.
Kathy Wood.
Yeah, that would have been really bad. I think that's you make a good point. But here's the one I think is actually, it's number 5, but I think it's most important. Does my advisor tell it to me straight? A good advisor won't just tell you what you want to hear. For instance, an advisor needs to be able to tell a client candidly to postpone retirement if there's a strong likelihood they'll run out of money in retirement. This is the biggest mistake I see in our industry, because what's the one thing advisors don't want to do? They don't want to upset their clients. So if you come in, for example, the beginning of this year and say, hey, why'd you have me in that mutual fund that lost 40%? A lot of advisors will say, oh,
we better get out of that one.
Yeah, I got a new one that's way better. We'll move you into that one. And that is a mistake generally. And again, they're sort of pandering to your emotional makeup. So people, yes, you need to work with somebody who's giving it to you straight up.
They need, and this is, but you see, this is why people don't know what they're being charged, because one of the pieces of bad news that most of the investment advisory people out there don't want to share is what they're charging their client.
And they don't know.
And so the client doesn't know. And then the other thing is when a market has gone down like we've seen, advisors, stockbrokers and the like, they just run away. They hide out. My wife would tell you a great story about that.
Yeah, I love that story.
She was there on Black Monday, 1987, working for Betcher and Company, as was I.
The phones were ringing. People were saying, what's going on?
Phones were ringing. There was not a single broker in the office except Debbie. She was the only one there.
That's a learning experience of sorts. Exactly. So, no, you need somebody to tell the truth. I got a couple other ones here. Good advisors also don't predict. There's a lot of people now saying, well, this has to happen now.
The Wall Street Journal didn't put that in.
They didn't put that in. And
no, they should have that in there.
They should have that, and now a lot of people are saying, well, don't worry, that was a bad year. But this year, we don't know this year. We can hope, but we don't know. Number 2, they don't trust ideas. They use back-tested, white paper reviewed academic work. It's not a series of ideas.
Well, as Eugene Fama said, he sees a new idea every few months from Wall Street. And he said in his long tenure, 50 plus years as a student and a professor and a Nobel Prize winner, he has seen maybe 5 things over 50 years that showed potential for higher returns.
And that's why he's hard on Wall Street, and maybe why he has the moniker Mean Gene. I don't know. And then back.
I thought it was Green Gene. I thought that was because he did Captain Kangaroo
now you're
for a
really
while.
Showing your age, Captain. Yeah. Okay. This one backs up what the Wall Street Journal said. They can tell you no. Sometimes you have to tell people they're wrong. And that's part of being a good advisor. It's happened already this year.
I was going to say, I would imagine it's happened quite a few times this year.
It's not a good time. Trust me, because I'm in the seat across the way and have to say, no, actually, you're wrong. And here's why. And here's the evidence. But a lot of advisors will never do that. They're never going to tell their client, because they, as you said, don't want to lose the client, got something else to sell, et cetera, et cetera. So I think that's a great article. And I think some of this is reasonable and some needs a little more thought. I'll put it that way.
Yeah, but they're not going to they are never in the Wall Street Journal in one of these pieces going to say, avoid advisors who make predictions. They're just never going to say that.
Well, no, because
it's so much of their audience and so much of their advertising revenue.
You got time for a couple of questions?
I have time for questions all the time because I love questions more than anything in the world.
It's fun. This comes from Michael in Maple Valley. He said, I heard you discuss wash sales on your radio show, but wondered if the following falls into the rule. I own 100 shares of, he didn't give the stock. I want to sell 50 of them for a loss to cover some other gains. I do not want to continue to hold a position in that stock that's at much lower trading price. If I purchase 50 shares at the lower price, then the next business day sell 50 shares at the higher, will the set of transactions be considered a wash sale?
Wait, I'm now confused. Does he own 100 shares already?
Let's just take the last part of the question. If he purchases 50 shares at the lower price and then the next business day sells 50 that I already owned at the higher price.
Yeah, it's 30 days either side.
Exactly. So
yeah, okay. I get it now. Yeah, 30 days either side. Doesn't matter. It's still a wash sale.
Okay. This one from David in Kirkland.
The way, hold on a second.
Yeah.
A wash sale means that you can't deduct the loss.
Thank you.
That's what it means.
And by the way, this only applies, you pointed this out in a recent podcast, but we can never forget to do that. This only applies in a taxable brokerage type of account, not in your IRAs, Roths. You can do as much as you like trading there. We don't recommend it. Had somebody today said, "Can I open an account and trade?" I said, "Yeah, but we won't be friends anymore." Okay.
This won't be. Wait, will they even be our client?
Probably not.
We won't let them be a client.
David writes from Kirkland, will I be getting a 1099 from the U.S. Treasury for the income earned from my I bond that I purchased? He said this year, but it's late last year.
No, you will not, unless you sell or you sold it last year. If you didn't sell it, then there is no taxable interest yet. Ooh, isn't that a nice feature?
So they're deferring the interest till later.
Deferred interest
That's
from
like
a tax basis.
Qualified account or something.
It is. I was thinking about it. I'm going, oh my gosh, yeah, it's like a little IRA. The interest on I bonds accrues tax deferred until you sell them, and you're technically not supposed to sell them until 5 years out. So you get 5 years at least of deferred interest.
And can we ask how much interest you made last year on yours?
Yeah, no, I'll tell you. I'll share that.
Tell
with
it to me straight, would you, Don? Please, just
what,
lay it on me, man.
Would I lie? Let's
because
see.
I remember I was Mr. Mean Gene last year, telling people, I bonds. Blah, blah, blah. It turned out that actually it's one of the few things that made money last year.
I don't have the number right here. I can't get back to my account without doing the whole login.
Yeah,
but it was about. On the 20,000 that I put in, I put some at the end of 2021 and then some at the beginning of 2022. I think it was about $1,500.
It's a lot of money. Yeah, why not? Sure. Okay.
On 20 grand.
Yeah. Good for you. As I said, it's one of the
certainly more than I made from Bank of America on my 0.01 savings account.
More we made from stocks and bonds last year.
I did. I beat the heck out of my stock and bond portfolio.
Pummeled it. The only thing that did better was, again, the Iroquois REIT. So that's still the number one performer for me.
I do not believe the Iroquois REIT because is it liquid? Can you sell it?
No.
Do you really know what it's worth?
No. This is just some number. I know. They tell me this is what it's worth. So
I don't believe those.
It's farmland, and that's become big deal. Bill Gates owns a lot of it, and a lot of other people do.
Oh, I have a little message for all of you.
Yes.
Here, as we're coming up on the end of the show. If you like calling us live with your questions, there's a 2-hour window once a week when you can call live, and Tom and I will take your questions and answer them on the air in Seattle and then in a podcast the next week. And that is Saturday afternoons from 3 to 5 Eastern or noon to 2 Pacific time at 855-935-TALK, 855-935-8255.
And because our teams won't be anywhere nearly involved in the super wild card weekend. Yeah, the playoffs.
Yeah.
That's easy weekend for us to stay busy with other endeavors. Yeah. God,
not going to be watching the Broncos play or the Raiders.
No, that's not pleasant in any way. If you want some additional help, you want us to look at your portfolio, help you a little bit, retirement plan. Gosh, we give you an hour free, no obligation, no sales pitch.
That sounds like a sales pitch,
It sounds like it, but I wish I could give out the names of people that I've done this with. Lots and lots and lots, especially
We've had
lately.
some call, though, and say, I had the meeting with Tom, and guess what? He didn't try to sell me anything.
Shocker there. So,
or I talked to Derek or whomever, Joyce.
So you just go to
forgot the name of our advisors.
You better write them down.
Taylor.
There you go, Taylor. You just go to talkingrealmoney.com and
Sean,
keep going. You're doing well. Aaron, mentioned him. Yeah. Justin. Yeah. Okay. That's okay. Talking Real. You're going to get you know what, for this when you visit next month. TalkingRealMoney.com. Click on,
I don't know. Ask an advisor.
Ask an Advisor.
No.
No,
Is that
Meet
it?
an Advisor.
Meet an advisor.
Yes. I'm glad somebody's paying attention here. So do that. And then also, as I mentioned recently, join us for Retire Meet. Don and I will both be talking. Paul Merriman will be talking. The terrific Apollo Lopescu from Dimensional will be all kinds of great stuff. Purpose in Retirement, Secure Act 2.0. That is Saturday, the 25th of February, live in beautiful Bellevue, Washington, or online.
Live online.
That's right. You can sign up for any of that at retiremeet.com. Take advantage of that.
Or meat.com works too.
Did I do well enough to earn lunch today, or what do you say?
If you're going to eat some Retire Meat, yes.
I'm going to.
You're going to have a Retire Meat sandwich?
You're so darn smart.
Oh, that's what we should call them. When the
like
roast
that.
beef, it should be the Retire Meat sandwich.
The Retire Special Meat sandwich.
These are cows that have been retired permanently.
They're not downer cows, but
no, they're just retired cows.
Retired cows. So good work.
All
Take
right.
advantage of all those things.
We got to go now. Time to leave.
That's good.
Say goodbye, Tom.
Say goodbye, Tom.
You just repeated me.
Oh, sorry.
I'm Don. That's Tom. We talk real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.